Welcome to today's webinar, Putting the Brakes on Rising Costs, 5 Ways to Keep Your Fleet Profitable, presented by Hub International. I'm Stephen Babcock, Managing Editor of Heavy Duty Trucking Magazine, and I'll be your moderator for today's event. I encourage you to ask questions during the webinar at any point, and we will try to address them all. However, if we do not get to yours, don't worry. You'll be contacted by email with a response after the event. Our presenters today join us from Hub International. We have Jerry Gillikin, Executive Vice President, Transportation, and Stephen Bojan, Vice President, Risk Services Transportation. Jerry is a transportation and trucking insurance specialist for Hub International. He has over 25 years of experience in the transportation industry advising clients on insurance and claims issues. He began his career with one of the largest motor carriers in the country and is well versed in all the issues facing the industry. Stephen is a risk manager for Hub and brings more than 25 years of transportation risk management, safety, and claims experience that includes truckload, home delivery, moving, and dedicated logistics. He advises clients on driver management, operations management, and risk management. During today's webinar, we will be covering the state of the transportation industry, 5 ways to improve profitability and achieve operational excellence, and how you can control your insurance costs. First off, I just wanted to ask our two speakers now, what currently is happening in the trucking industry that is not only creating financial challenges for fleets, but also causing some of them to go out of business?
Well, I think we'll cover a lot of that today, Stefan. So much of the change that we're going to talk about today has happened in the last 12 months. It probably started 2 or 3 years ago. And from our standpoint, from our side, the insurance side, it was this nuclear verdicts and more frequent claims. And from the operational side, we're going to talk about spot rates and what happened in the market, ELDs, different things have happened over there as well.
Really, what we see with trucking, and as we move to the next slide, we'll get into a little more detail, is trucking is really a leading indicator about 6 months ahead of everybody else. And what we're seeing is it's become so much more dynamic, and change is just a constant, as we'll see on the next slide.
So we're going to talk about the state of the industry, and that was how we were going to start this off. And then I read an article this morning that summarized it pretty well. And the article said, carrier bankruptcies. Is it a sign of wider trouble or simply a few high-profile fleet closures? They went on to talk about some of the ones we've heard about in the last 6 months, I guess, Steve. New England Motor Freight, HVH Transportation, Falcon Transportation, LME, and then very recently, Stevens Transport closed down their tanker division. As Steve pointed out, a well-run company, they closed down a 500-unit division that wasn't making money. And Roadrunner, I believe, laid off 500 people themselves. So it's happening on a pretty frequent basis. I was going to take a moment to also explain, maybe I'm the one who feels like it needs to be explained, but why two insurance guys explaining to you about your business and the economy. Here's what I think. Steve and I both started our careers in trucking, so we understand it. We certainly have empathy. The guy in the office next to me owned a trucking company, and many people in our office have spouses in the industry. I think we live and breathe it, really. So I think we can add something to what your questions are, just because we do it every day. So we talked about these bankruptcies and people going out, not all of bankruptcies, but people going out of business, and the numbers have literally doubled in the last year, and we're on pace to get much higher than that. We're also going to talk about the rates that had gotten higher last year and the reasons why, and then how they dropped this year, and no one was, or a lot of people weren't ready for it. And then the cost of everything is rising. And again, we'll go into detail about what that means. I've skipped over the regulatory just because I've got an expert here beside me who can explain that better.
So there have been some regulatory changes in 2019, and some of them have been going on for years. And if you're to say what is the reason it's so challenging from a regulatory standpoint, it's because people don't know. There's a lot of unpredictability. People aren't sure what's going to happen. Really, there are 3 big issues that are going on that are concerning everybody. First is obviously the hours of service. And I'll lump into there the conversion from AOBRDs to ELDs and how that's going to reduce some flexibility for certain drivers. It's going to, tax our telematics providers or technology solutions folks. Because if you were to look earlier this week, one of the largest telematics provider had an outage across their entire enterprise. So there's some questions there. And then there might be some changes in the hours of service regulations in early 2019. We're just not sure what they're going to be. The FMCSA made some proposals which seem very advantageous to trucking. They've been slow to act, and there's a lot of commentary periods, and we're just not sure. The driver requirements that are supposed to come about in 2020, if they happen, it's going to slow the entrance of new drivers. It's going to kind of move that faucet from what's now a steady stream to half of what it is, because it's going to be harder to hire CDL drivers, new CDL drivers. And that's, a lot of people are unsure if they're going to go all the way through with this. They're pretty difficult, and that's going to be some hurdles for clients, for our clients, for companies that really have had an informal entry program, especially for what we'll call local fleets as opposed to the over-the-road fleets that are actually probably complying with a lot of these things already. And then last but not least is the drug testing clearinghouse. Well, that shouldn't have a major impact. It might, because really what we're doing is we're going to identify more people with substance abuse issues, which will knock some people out, which is a good thing, but it's going to have some interesting effects. And again, from a regulatory environment, what it really demonstrated is this was supposed to go into effect in 2014, and due to a bunch of technology issues, some concerns about privacy and other things, it took 6 years to get the drug testing clearinghouse, which should have been a relatively easy database to implement, to the point where it's completely functional. So what it really tells us is it's a challenging time for truckers because there's a lot of uncertainty.
So what's driving the insurance rate increases? I'll refer back to that article I saw earlier today that said that the increases have been 10 to 30% this year and expected again next year. That may not be the right number. ATRI, American Transportation and Research Institute, came out with their numbers this week, by the way, saying that from 17 to 18, insurance rates went up 12%. So that's probably pretty fair estimate for last year and maybe for next year again. You start combining this stuff 2 and 3 years, you'll see what kind of trouble that may cause. But what's doing that? So the increased number of submitted claims, no doubt about it. There's more people on the road. There's a good economy, so it's just harder to get around. And then there's more plaintiff attorneys. They're more than willing to jump on these claims, whether they're really at fault or a fraudulent claim, or just see what they can get. The claims costs are increasing. I'm not sure that's as big as everything else, but the cost of every vehicle that we get in an accident with and the trucks that we're in all cost more than they did before. The people who get hurt, the doctor's office, everything's going up in cost, so that we shouldn't be surprised by that. But the surprise is the nuclear verdicts. We started hearing about it, Steve, probably in 16, 17.
Absolutely.
But it was a rare thing,
Mm-hmm.
and now it's a normal thing. So I'll forget one or two off the top of my head, but in Texas we had $100 million, $90 million, and $40 million recently.
Yep.
Georgia had a $280 million, and then New Mexico had the $165 million verdict. And I'm just mentioning the ones off the top of my head.
And really, when we both started in this industry, $1 million was a shock loss.
Yeah.
It's no longer a shock loss. Really, not until we hit 5, and then the 5 million, and then now with these 10 million plus nuclear verdicts. And one thing to remember when we talk about these nuclear verdicts is most of them are in some of them there were no fatalities, in some of them there were unfortunately 1 or 2 fatalities. It's $100 or $280 million when you have 1 or 2 fatalities. I mean, the amount of money we're talking about really puts people out of business, and the insurance carriers are really looking at this closely.
I'm trying not to go on and on about this for too long, but I think it is very important and very relevant to everything we're talking about here. A couple of things that have happened. You've seen all the signs on the highway for years, and they're probably multiplying because guys are making so much money they can afford to put up more and more signs. But I think the largest firms, plaintiff attorneys that are coming after us are going out and telling these smaller firms, bring your case to me, we can handle it. So the smaller guys used to be able to take a claim, try to get a settlement real quick, make some quick money, and get out. They didn't have the money to go fight a claim for 2 years or go hire the best experts. And now you bring these to the larger firms, and they say, we'll pay for all that. We'll help you with our people and our time. Oh, you're going to go after trucking? I've got a whole sheet of things to go after. Oh, is that trucking company? I can tell you everything to ask for. So they have all that information. We as the defense attorneys are not working together as well as they are, and we're going to have to change that. But they've got a little advantage on us from that standpoint. The other advantage, the scary advantage, is private equity has a lot of money, and they've seen a way to make money in this with what is referred to as litigation finance. Private equity finds out about these big claims, and they'll say, we'll invest in that. So let's say it's a couple of injuries. Might be able to settle for $200,000. We want to fight it for $1 million, and we'll back it. We'll give you the money up front to back this claim. If you win, we get part of the winnings. And to make it worse, a lot of times the claimant or supposed claimant will want to settle, but they're trying to get them not to, so they'll lend them the money for what they expect to win at very, very high rates, I might add. And at the end of the day, you end up with a plaintiff, and maybe they won, but there's no money left after they get pay all the fees and things like that.
Absolutely. And then the last area is really distracted driving. And what's happened with that is the amount of distraction on the road has gone up incredibly, and it's leading to more crashes. I mean, everyone has a cell phone, and even with the laws as we see them, more people are on their phone on the road all the time. And then the vehicles we're driving are all basically, the new ones, all look like TV consoles. And so there's distractions all around us, and it's taking our eyes off the road. And really, a lot of the bad crashes that we've seen through the years are, I took my eyes off the road for a second or two, and I didn't realize traffic was stopped in front of me, or I have to overcorrect as I veered off the road. So really, distracted driving is really the cause of probably close to a third of all crashes, and it's leading to more severe crashes.
I was just going to add to that. In the old days, we used to see somebody putting on their makeup or a guy spilling his coffee. Today, we see somebody with a smartphone and trying to mess with that media console. Oh, and their other phone rings. So there's your distracted driving for you, and the trouble it can lead to. Let's talk about what's driving the financial issues that are affecting us today. Certainly, driver shortage is, I believe that's number one on the list of worries from the trucking industry today, is driver shortage. And it has been for a while, but it's now number one. Driver retention is right there with it. So why are there open trucks? It's a couple things. We see in different parts of the country, oil field and construction will come in and offer them something better. Maybe you're home more, maybe you make more money. And it's short term, but it really is a disruption when these guys come and go. Also, this is my view of talking to so many trucking companies and so many drivers. They're fed up. Drivers are getting fed up with this. They're not being respected, especially in my mind. They get to the shipper's office and they can't be unloaded. You can't park your truck there, etc. They probably haven't been paid well. It's changed last year, but until that point, it wasn't going up like it should have been. And so people have left that industry. Now we're trying to get them back or getting you guys to come in. It said the wages went up in 2018 and benefits, and we did a good job of that. We probably were a little late, but we did a good job of it. The industry did a good job. But we were able to do it because shippers were willing to spend more money. And now shippers are seeing capacity, and they don't need us quite as bad. So they're lowering those rates. We've already got our expenses high, and it's hard to fix that issue. The other thing that comes up is fuel cost, and again, that ATRI report that I mentioned that came out this week shows fuel went up from 2018 by 17%, and probably going up again this year.
Yeah, really it's going to continue to rise. One of the concerns that we have and that we're seeing in a lot of the journals is there's going to be a change, an international rule, which is going to require shipping companies that operate ships to move from bunker fuel, which is really the sludge at the bottom of a refinery, to low sulfur diesel fuel, and that's going to increase, and that's going to reduce the supply, increase demand when there's supply remains constant, which will inevitably increase costs in some regions of the country for diesel fuel, and it could be significant. The rule for bunker fuel ban goes into effect at the beginning of 2020, and there's already been a bunch of articles that the shipping companies are going to pass these costs up into significant costs onto their clients, which means that it's going to have a pronounced impact on the supply for those of us that are going to truck stops and to gas stations who want to buy diesel fuel.
So you also have rising equipment costs. The trucks that our clients are in are costing more every year, and then to the advantage or disadvantage, depending on how you look at it, the safety features that we're getting installed are just costing more money. So now we're talking about disc brakes on all wheels. We're talking about ELDs, GPS, AERs, which is accident event recorders, or cameras for some of you. All those things are going in. They're costing more money. We're getting lane departure warning, collision avoidance. Those things are fantastic for the industry, but they do cost more money. And the people that we're having wrecks with, that's costing more too, I might add. Then there's, for the most sophisticated drivers out there we're seeing, or trucking companies out there, we're seeing the Bendix being added. Then they came out with Wingman and Fusion. It's fantastic technology. It's just costing more money. And we put on here also some other financial issues. We know it costs more to work through a broker, but there's more dependence on it, is what you're saying, Steve.
Absolutely. As we rely more, as many truckers begin to rely more on brokers or freight intermediaries, those intermediaries are taking a percentage of the revenue that would have gone to the trucking company. So the reality is their trucking companies are getting less money. And many of these brokers are going to the shippers and saying, oh, by the way, not only am I taking a small percentage, but I'm going to do this for you for less than that trucking company would have charged in the first place. So there's less shippers paying a little less, and the broker is taking a piece of that out, which means that trucking company is getting less. So there's more fingers taking out of the pie. Also, the demand cycles are changing. It used to be you had your peak season, and for different types of transportation within trucking, there were different peak seasons. But, so you sort of expected when things were going to happen. Today, those demand cycles are changing. As Jerry mentioned, energy goes up and down, so the demand cycles. Weather changes demand. It changes the ability to operate. And then last but not least is the ELDs, which is this reduction in capacity. Not huge, but a reduction in capacity, which helped to lead to rate increases in 2018. But in 2019, what we're seeing is that the adjustment was made, but that still capacity has gone down a little bit as people are becoming more compliant. That fudge factor that some drivers maybe used in the past to allow for them flexibility isn't available, I should say.
Okay, well, we'd like to go to our first polling question. We'd like to actually hear from the audience, and we would like to know, what is the biggest pain point that your business is experiencing from a financial perspective? Now, as we wait for the audience to respond, Jerry, can you quickly tell me what's the greatest financial pain point that you're hearing from your clients?
Well, when they're talking to me, they're telling me I'm the problem, insurance. But realistically, ATRI, the report that just came out, said fuel is probably the biggest thing. Last year it was probably the drivers making sure they're getting paid correctly.
Absolutely. And, to add to that, I think it's when we talk about these pain points, insurance is the biggest challenge of insurance is this is money that doesn't come back. And so a lot of our clients are frustrated in that it's not an investment in technology or iron. And so when they see these costs going up, it becomes a little more frustrating than maybe some other costs.
Okay, now we're looking at the poll results here. It looks like the number one pain point we're talking about here is going to be the driver wages and benefits, followed very closely with insurance costs. And it looks like fuel costs and equipment and technology costs are kind of rounding out third, almost changing a little bit, but about sitting there in third there. Now, from a technological standpoint, is that something where there's any sort of ROI that we're seeing with some of the new safety technology, or is it something where we don't have enough time with it kind of behind the driver's wheel with this new technology even see that kind of ROI?
We are seeing an improvement. There is a good ROI on technology. what we're seeing is increases in fuel economy and a decrease in crashes. So for fleets that have really embraced technology and are utilizing it very effectively, they're seeing results. And, but it's really looking at it from a holistic approach, which is what we're going to look at on our next slide here, which is really important. So let's talk about improving operations. And, really what I focus on a lot here, as does all our folks at Hub, is we're not talking about safety or risk management in a silo, in a bubble anymore. We're talking about operational excellence and looking at how you can improve and how, by doing this, you touch all facets of your organization. And it really leads, our some really key concepts are, first, we'll talk a little more about this, but finding your niche and differentiating yourself from the competition. It's critical when we talk to customers, to drivers, and to the insurance carriers. They want to hear what makes you special and why people should bank on you. It's huge. Secondly, we're going to talk about technology, as Stefan just mentioned. We need to make sure we use it effectively and that it works together. The ELDs really brought technology to a lot of companies that never had it. But some of them never got to the idea that we got multiple parts to this. It's not just moving to a log that we don't have to use paper anymore. So third, you need to be a good risk. Insurance carriers want to see good risk. Insurance costs are going up. Jerry mentioned 7%. Some fleets have seen 10 to 30% increases. We need to be able to control these costs. And oh yeah, by the way, becoming a good risk makes you a better service provider. You have less crashes, and cargo claims aren't really claims, they're service failures. And we'll get to that. It really is important to remember that. Fourth area, which is probably the most important and goes to that idea about the pain point about driver costs, is you need to hire good drivers, care about them, and keep them. These are the keys to retention. You've got to make sure you bring on the right people and you treat them well so they want to stay. Part of that is going to be pay, as is mentioned. Part of it, and we'll talk a little further, is going to be about how what those drivers' perception is and how they've been treated. And then last, and Jerry's going to focus on this extensively, is you need to partner with an insurance broker who knows your business. Again, this is one of those costs we can control to a small extent, which is insurance. I think there's more control over insurance costs if you do things the right way than over fuel, where there's really, you can improve MPGs, but we can't tell OPEC what to do, or international governing bodies who say you can't use bunker fuel anymore. So, and when I look at partnering with an insurance broker, I was a risk manager for a 750 truck fleet a number of years back, and from my perspective, I viewed my insurance broker as my most important partner. Really, what he did and I did in concert was how I kept my job at the end of the day. Keeping the cost of insurance down and having an effective process to deal with claims and to really kind of keep things moving over the course of the year, because let's face it, our customers today are getting more sophisticated. They want to see what insurance companies we're using and that our coverages meet their requirements. It was that important to our organization. Now, when we talk about excellence, the 80-20 rule, I was at a conference not too long ago, and a consultant was up there saying, this is what I talk about with all of my Fortune 500 clients. We've been talking about the 80-20 rule primarily in safety and, again, in human resources about what it is and how to go about working better with our clients and how to eliminate some risk. And what we see at the top of this slide is 80% of our profits are driven by the top 20% of our clients. And you look down, 80% of our time is spent by the bottom 20% of our clients and our drivers, our employees. We're spending too much time on working with folks that aren't making us profit, that aren't making money for the organization. So what we need to do is really work more with our most profitable clients and facilitate those relationships and figure out how to improve that bottom 20% of our employees so that they don't cause claims, that they don't cause problems, because one of the hugest costs in that 80-20 rule is management, attention, and time. When we spend a lot of our time dealing with problematic employees and problematic situations, we're not able to focus on running our business and doing a better job. The next thing we want to talk about really here is finding your niche. Understand who your good clients are. Just because you have revenue doesn't mean it's profitable freight. Back in the day when I was working for that big fleet, one of our jokes was, we have a lot of cash flow, but we're going to lose money on every load. It didn't work very well. So we need to make sure that the freight we have is profitable. What are the costs associated with it? Is there traffic? Are there claims? Are our drivers having to wait for it, as Jerry mentioned earlier? Those are costs that we have to calculate as part of if that freight is profitable. Sustainable lanes. We talk about one of the best things that every company wants is to be running that freight on a regular basis. Drivers like it. We have less losses when we run those same lanes. We become knowledgeable in it. We have less claims. And then, there's a trucking company in the Midwest that spends every year, by the middle of the year, they review the bottom 10% of their clients. They review these folks and say, what do we need to do to improve their freight, or what do we need to do to get off their freight so that we focus more time on those more profitable clients. So I recommend we should always be understanding what our client base is and where to focus our time and attention. And the second part of your niche is becoming what we'll call the carrier of choice. That is, somebody who does a good job, a fleet that is able to get a premium for the service they provide because they just do it better than the competition. We think about this, it's always being on time and not having claims. When I started in transportation a little more than 25 years ago, one of the first things I learned in orientation was, Steve, we don't sell trucking. We don't sell transportation. We sell to our clients peace of mind that the freight's going to get there when it's supposed to, and no worries, both for the shipper and the consignee. Freight claims, again, are business failures. We just can't have them. It doesn't matter if we're delivering plastic pellets, fuel, televisions, custom electronics. Everybody wants their product in perfect condition. It's what they expect. And last but not least, when we talk about being a premier carrier, it's excellent CSA scores. Every sophisticated shipper, which is most shippers today, and every freight broker is looking at CSA scores. And even though some of the data has been taken out by the FMCSA, they all have technologies which tell them what the scores are. We need to make sure that we're watching and monitoring it.
We're going to go into a case study now to talk about some of the challenges that we've seen with our customers and what we've done about it and what the results have been. The first one we have here is a client that's pretty large, very good at what they do, and we talked about the challenge being delivery inaccuracies. But by the way, they barely ever made a mistake. So when they started making mistakes, it really stood out, and their customers noticed it and started talking to other truckers about coming to haul for them. And the drivers were not making the necessary changes, even though we were talking about it every day. By the way, I was going to talk about this, and then I thought to myself, Steve's the guy who went out there to fix this problem, so maybe you should talk about how you did it.
Really, there were issues, and one of the frustrations was talking with their very sophisticated director of safety. We are telling our drivers, we're talking at them about what to do, and their eyes are glazing over. So what we came up with is, how do we get them to participate in the improvement process? Again, that quality management concept. Bottom-up ideas. They came up with solutions to these problems, which weren't difficult but somewhat complex. And then they had an incredible amount of buy-in because they came up with the solutions. But one of the first things we had to do was train the trainers on how to go about eliciting ideas from their drivers. We couldn't be talking just at them or to them without listening, because we needed their buy-in. They came up with some ideas we would have never thought of. And the results were really interesting. There were no more service failures. The customer delivery issue was gone. But most interesting, by changing the way we looked at problems and challenges, it reduced the cost of claims across the entire enterprise by 17%. Drivers became proactive and talked to management, talked to safety managers about solutions to problems and issues they saw out on the road. They became part of the safety team. As we say, everyone's part of safety, and by doing this, they really reduced claims across injuries, across crashes, and across delivery failures. It was huge. 17% for a large, over $100 million trucking company. That's a lot of money. So let's talk a little bit about technology. Everyone had to implement technology, almost everybody, with the advent of the ELD requirements that came about in 2017. So now everyone's pretty much on board. Challenge is, when we were first looking at these, for a lot of people, they were concerned strictly with cost and with not upsetting their drivers. It was their first attempt to really track vehicles in real time. And really, it was an eye-opening experience, and it showed where drivers were spending their time, which a lot of trucking companies didn't necessarily have a great idea about. They thought they knew where their drivers were, but they didn't necessarily. So ELDs and really what being a part of telematics was an eye-opening experience. But the challenge here was, how do we bring this across the enterprise? And really to bring it to breaking those silos of compliance and safety versus operations versus human resource versus maintenance. And, most fleets today are also using technology for dispatch and for accounting. So we want to bring all of these systems together, and we'll even throw in the video event recording so that we're really getting this great picture about what our drivers are doing and how they're doing it. And by having these systems talk to each other, we really increase efficiency, transparency between the driver, dispatch, and management, and we don't have these he said, she said discussions, and partnership. Everybody's on the same page. And, one of the key parts of this is information. We don't often say information is a commodity. The information we have as a trucking company about where our product is, how it's getting to the receiver, and the condition of the product, particularly with refrigerated product, is critical. So we want to make sure that we have this, and we can provide it to all parties. It was in the previous years when I was in the midst of trucking, it was EDI, or electronic data interchange. Today we really refer to it as blockchain, and it's a competitive advantage. So it's bringing that together for efficiencies, cost reduction, and really we can charge more revenue if we provide more information. So we're going to talk about another case study here about using telematics for your business advantage, to a business advantage. The reason our client originally did this was they had drivers that were getting stopped on the road for speeding, and there were log issues, hours of service issues. Logs weren't being completed, they weren't being done correctly, and it was causing problems with the organization. They had CSA alerts up, and they were getting placed out of service. And they didn't really have anybody to monitor this. They didn't have enough admin support. So the solution was this was probably about 6 years ago, was implementing a technology solution, using a telematics provider that had an ELD product, could tell them where their vehicles were and how they were being driven. And it also audited the logs electronically, so it was very simple the next day for their safety director to look and see if there were any violations. He could look for, basically the exceptions an exception report as opposed to having to go through every log. So what they did is they picked a vendor, and then they put a big screen television which showed where all of their trucks were in the dispatch room because they were running a pretty tight radius. The result was they stopped their speeding violations. They improved greatly their hours of service compliance. And really, ironically, the biggest benefit, which they never thought about on the front end, was they improved customer service by knowing where drivers were when change orders came in. This is an 80-truck aggregate hauler in the Midwest. So they could move product to different places very easily because they were delivering the same product to everybody. But as needs changed, they could change dispatch. They could move people around by knowing what streets they were on, by knowing where they were at in the route. It provided an incredible amount of flexibility to their dispatch, which made their clients incredibly happy.
All right, we're going to talk about becoming a good risk, and to many of you listening now, staying a good risk, because getting there is part of the problem and staying there is the other part. Today, I say this all the time, today insurance companies care about, or they focus on, a few pieces of data when a new submission comes in for a renewal account. And it's usually not the loss runs, believe it or not. They want to see your CSA scores, your ISS scores, and they want to dive in deep and see, is this somebody I can defend if there was a claim in the future? Whether you're right or wrong in the claim, if you don't have good scores, they're not going to be able to help you. Then they'll look at the loss runs and financials like they used to in the old days. Being a good risk means always watching CSA scores, keeping up with them. There's been a lot of debate on whether it's good or bad, but it is still a measuring tool that's fair for everyone. And we know, most of our clients know this too, but we know what each one of these basics does and how to find out what the problems are and how to help you correct those problems. They can't be done overnight, and in many cases they can't be done in 6 months. That's why we're talking about it every day and not at renewal each time. The next bullet point was being active in the management of your claims. We try to help that process instead of asking you to be active. We come out and do loss claims reviews so we can talk about the open claims and make sure we're all on the same page. Sometimes the adjuster may not know something you know, or you may have some information. They may have some information that you don't know, so they get ready to settle a claim. We want to all be on the same page. And what we don't want to do is wait until three weeks before the renewal and find a big reserve that we didn't know about that might be wrong, and then try to explain that to the marketplace, because it's literally too late when you get to that point. One of the last things here was explain all the good things your company does to improve and have a great safety performance. It seems like everybody should already know that, but Steve and I went out to see a really big and good client, and they were about to have their first interview with loss control for a new insurance company, and they were nervous. And Steve just kept prodding, asking them questions, and they said, well, they started telling them everything. He goes, quit backpedaling and tell them all of the good things you're doing. You're doing great things. Make sure you keep telling them about those great things. So I think that's one of the things you have to keep in mind. Do the good things and be proud of them. We're going to do another case study here, and this is about turning the CSA scores upside down. I don't have to read it because I lived it. Steve lived it as well. We walked into an account with about 150 trucks, all owner-operators, with poor CSA scores. This was several years ago, and it was coming to their attention that was a problem, because insurance companies were less and less apt to look at you, or they were going to charge you a higher rate. And I don't think the management of that company really understood how important that was, or what each basic was, or how to fix it. It's just like too big of a problem. And I might also add that at the first safety meeting we went to with I'll go back to the one with the management. The first safety meeting we went to with the drivers, 150 owner-operators, they said, there's no way we can fix this. And I'm proud to say that 2 years later, probably, they're under a 50 ISS. They no longer get inspected, and they're high-fiving each other. So a lot of good things happen out of that. But back to the first parts. Steve came in town, and we had a meeting with their management team, including safety and ownership. And at the end of the day, they said, we've never had a safety meeting this good.
And I think the biggest part was pointing out it wasn't hard to make the changes, and it didn't cost a lot of money. It was about identifying what was, the few drivers that were causing the problem, telling them what their scores were, telling the drivers what the CSA scores were, and why it was so important, And then they actually brought in the other things they did. They brought in a DPS officer to show them how to do inspections, and Jerry participated in driver meetings and really talked to them about the scores and made it fun. And they started an incentive plan too. So the cost was incredibly small, and it had a huge impact on their insurance costs. You know, it's not always money. Sometimes it's just really just paying attention to the little things. So now let's talk about hiring good drivers, because this is really a key part of it and the keys to the castle. When we hire good people, we're bringing them into our family. And I think that's one of the things we have to think about, whether it's company drivers, owner-operators, or even hiring your brother-in-law to be a driver for your 6-truck fleet. You are bringing them into your family. And we need to keep the good ones. You know, that's one of the biggest challenges in trucking. Many industries, if they look at the turnover rates in trucking, they say, we can't survive with these turnover rates. Things that we take for granted in our industry. So we need to hire good people and keep them. Provide training. We need to teach people your company's, our company's way of doing business. Don't assume that just because a guy's been hauling fuel for 20 years, that he's going to do it the way you want them to do it. Or if it's a flatbedder, that he's going to secure loads correctly. We need to make sure people know your way and that they're going to do it the right way, which is your way, every time. Communicate with drivers here regularly. Make sure that, you know, with the outset of Omnitracs and telematics systems and smartphones, many fleets stop talking to drivers. They just send messages. You need that personal touch. Tell them what's going on. You know, ask about their family. It's important. And beyond that, communicate what's going on within the company. They want to know. Nobody wants to read on the news or hear on the CB that there's a problem with their company. It's the worst place, because then people are going to get very nervous. That communication and engagement, what I'll call connectivity, is critical. Continuing education is really about treating drivers as professionals and management too. We need to keep training them, tell them the right ways to do things, and provide feedback for improvement. The last area on this slide, again, this is somewhat commonsensical, but it's amazing how often we don't do this. Make sure your wages, your total benefit package, your total compensation package is competitive, and communicate with your drivers what it is. They don't always realize. They see down the street they're about to leave because you pay 40 cents a mile. The guy down the street pays 42 cents a mile. They don't realize that they're getting 2,500 miles by you, and down the street they're going to get 2,200. Yeah. Or that you're going to get them home every weekend, and down the street they're going to work over the weekend. You know, it's really important. And on the benefit side, we don't spend enough time talking about insurance and retirement packages and other things that may even be incredibly inexpensive, like LifeLock or defense for truck drivers, you know, that don't cost anything, or even Aflac, and really making sure that we tell them these things, and these are benefits that they value. You know, here we have another case study where a client of ours with 250 power units had a lot of turnover and probably 20 to 30 empty trucks at any given time. They spent some time reviewing what the problem was, realized that they had a recruiter that was focusing on sales and numbers and wasn't focusing on quality. They brought in a new recruiter with a great reputation, solid experience, and really a great value system. She tightened up the hiring process using good vendors, started using the PSP, which is the pre-employment screening program offered by the FMCSA, which talks about roadside inspections over the last 3 years, really put in place some strong controls over what could be acceptable on the MVR, brought all these together, and really also utilized the interview process, both over the phone and in person, to improve who she was bringing into that company's family. And while there were fewer drivers coming in, there were way fewer drivers leaving. Turnover decreased by over 30%. They now only have 4 empty trucks, and because the quality of the drivers improved, and there was more experience with the company. There were fewer crashes, and they reduced their losses considerably. It really was a win-win-win, and it's just about changing that culture of making it more, driver-centric and talking about family.
So up to this point, we've discussed 4 ways to address operational excellence, whether it's finding your niche, implementing technology, becoming a good risk, and hiring good drivers. This next polling question is going to lead us into the last part of the discussion. What are you doing with your insurance broker to actively manage your insurance costs? Now, as we wait for a response, Steve and Jerry, can you explain how fleets can manage their insurance costs?
Well, I think there's a lot of ways, but most of them we've started in this conversation here today. You can't manage your insurance costs until you're managing your company correctly, because once you become one of the motor carriers that insurance companies want, then they're going to fight for your business, as opposed to being someone with 3 alerts and 3 basics and an alert, or a 95 ISS where only a few companies are going to insure you. The more you're talking to your broker, the more you're working with your safety department, the more you're communicating with your drivers and treating them with respect, the better you're going to be. And the better you're going to be, the easier it's going to be for an insurance company to see that's somebody they want to do business with.
Okay. So it looks like with our results right now, for more than half the people, we have all of the above as what they're doing to manage their insurance costs. Looks like the majority knowing and managing their claims looks like it's coming in around second, and third we have reducing CSA scores.
Good. Well, let's talk about reducing insurance cost. That might be of interest to a lot of people. So we start with knowing your own business and knowing the right broker. And I'll refer back to that article that was posted today. This is a quote from that article, and it's from Tommy Rook, who's the founder of Motor Carrier Insurance Education Foundation. He notes that it's more important now than ever for carriers to align themselves with an insurance agent that understands the transportation industry. It seems like everybody would know that, but even today, we talk to people and say, well, so my cousin does my insurance, or the guy I go to church with, and that may be important, by the way, but today, I say you better find somebody who knows your business, knows the trucking business, knows the right insurance companies and the right coverages and the right types of program to put you with, because this is no time to be guessing. The results, which you saw of 10 to 30% per year, you don't want to be on the high end of that, I can tell you. You want to make sure the broker you select has access to the right markets. In the soft market, when things are easy, when everybody's getting quotes, we can go to a third party they call wholesalers or MGAs, and you can get plenty of quotes. In a hard market like we're in today, that's fewer and harder to get. You just need more direct access. You need people who have access to more of the markets and understand what you're looking for. And you also need to have somebody who understands what you need. Every trucking company is different. Every trucking company is different. Some will be better off with a deductible. Some are better off without a deductible. Some are better off with a different type of cargo coverage. There's just a broker getting to know you is going to make all the difference in the world on how they can take care of you. This is not a one-size-fits-all, I can promise. So we're going to talk briefly about looking at insurance alternatives. The majority of the trucking companies, and I've been doing this for 30 years, buy first dollar, zero deductible, guaranteed cost. That's what they call that. That's what most people buy. They've always bought that. There's no downside to it. By the way, there's no upside either. If you have a great year, they pat you on the back and probably give you a rate increase anyway. So what's happening these days, as prices have gotten up so high, is people are saying, what else can I do? What's the option? Well, one option is to take some of the risk yourself, sharing the risk. And you can do that with $1,000, more likely a $5,000 deductible, and cut some of your insurance premiums. And if you don't have the losses, you'll save that money. You can go to the other end of that spectrum, too, and you can go self-insured or take a $1 million deductible. Most people do something in between those two, which is taking a deductible, a combined deductible, looking at retention levels, or looking at captives. So there's a lot of choices in that regard, but you need to know what you're getting into. And again, having the biggest buzzword that's happened in the last 3 or 4 years is captives. They've been around forever, by the way, but the trucking industry really got excited about the idea of a captive. I've been doing it personally for 20 years, and some of my clients have been in the same captive for 17 or 18 of those years. it fits them. Many people, it doesn't fit. And I think when people come to me, a lot of times they're coming to me because they heard it's the silver bullet. And I can assure you there is no silver bullet. Self-insurance is not a silver bullet, because if you have too many losses, it will cost you more than buying insurance on your own. But looking at the second column there, alternative risk and captive programs can be very effective, which is why customers stay in them so long once they get there. There's multiple types of captives. We won't go into all that today, but we're talking, you can have a group captive or a single parent captive. You can have a member-owned captive versus a rental captive. You can have a heterogeneous versus a homogeneous captive. And there are different retention levels within all of them. Again, at the end of the day, how they're set up makes a big difference, but what your losses are makes all the difference. So we'll do another case study, and this is a client that had a low insurance cost, but was not happy with the way claims were being handled, and his loss runs looked very poor because these claims were, sometimes they weren't even at fault, nothing was being done on them. So what they wanted was somebody that was way better at understanding their company and was way more aggressive in handling claims. They asked for a captive, and they asked for it late in the game. They were a little small to be getting in a captive, so we probably didn't make that one of the first things we brought to their attention, but they were interested. We found a captive partner that would go out there on short notice, and we put something together that made a lot of sense to them. At the end of the day, you'll be surprised. At the end of the day, their insurance cost, what they paid for insurance premiums, stayed about the same. In a first dollar program like they were on, if they had a good year, they got a pat on the back and maybe a rate increase. In this captive, they're seeing 25 to 35% return on their money they put into this, 2 years in a row now. And what's happened is they stay good. They've got more incentive now. They're looking at cameras and other things to make them even better. They've got all the incentive in the world to lower their losses so they can get money back. And they've got the right claims people that are helping them, which is making a huge, huge difference.
So as we really just kind of recap what we just talked about, it's about really, one, finding your niche and what do you do best, and really telling people what that is and telling your own people what it is that you do really well and sticking to it and not going too far afield. Utilize technology effectively. It's integrate it, work with providers, and make sure that your technologies talk to each other. Be a good risk. As Jerry said, that's a key. All of these things that we talk about, hiring good drivers and caring about them, that's the other part of being a good risk and really, being your best. And then lastly, partnering with the right insurance broker who knows your business and knows the insurance business. Can talk about all of the benefits of different types of coverages and products that are available.
Well, it definitely is important to consider these 5 ways of improving profitability through these tough financial times. Steve and Jerry have clearly outlined practical ways motor carriers can impact their profitability in these challenging times. But before we move to the Q&A, Hub would like to know how they can help you achieve operational excellence. So let's quickly hear from you in our last poll. And while everyone answers that, we're going to move on to our Q&A. We have a little bit of time left for some of the questions that came in. So starting off here, can you go into more detail about a captive program? Is this the type of program available for all fleets?
Well, basically, it needs to be. You need to have enough premium to be able to fund your losses. So again, the captives can go anywhere from a $25,000 or $50,000 deductible up to $1 million deductible. But for the small end, yeah, someone with 30 or 40 trucks could probably qualify. It'd be better if you had physical damage and work comp in that captive to make it work, because you are funding for your own losses. It's available. You probably need to start a little bit earlier and make sure you have a strong financial to be able to do it. But yes, it can be available to most carriers with more than 30 or 40 trucks.
Okay. Now, what kinds of programs can fleets implement to get good drivers and keep them?
First thing is to get good drivers, it's how do you attract drivers? How are you presently attracting drivers, and what works best? I think some of the best programs we see are driver referral programs where we give our drivers money for bringing people they know, these known commodities, into our fleet. And then hiring good, if you're going to use a recruiter, hiring good recruiters who understand the company goals and are aligned with the safety department, as opposed to just worry about becoming a mill. Again, at that 750 truck fleet, our biggest problem was our recruiter, who just didn't understand that you need to bring in good people all the time. So it's really about having those good people, and then keeping them is obviously probably even more important than bringing them in.
Yeah.
And that comes down to communication, training both your drivers, but really training your management staff. We did that recently with a client, talking about empathy, talking about knowledge of trucking, making sure they know what's going on out on the road. You know, for dispatchers today, when we started in trucking, anybody in dispatcher operations really had a lot of experience and was a professional. Today we're hiring a lot of young people who have no knowledge of trucking, and we need to get them out on the road a little bit with the driver to understand what it is that driver goes through on a daily basis. My second day in trucking, I was out with the driver running from Chicago to Indianapolis. Ironically, the next day that truck had a crash. So I learned how important safety was, and really was able to have that rapport with drivers. And we work closely. It's also learning about best practices from other people. One of the reasons we're able to talk today is we see what works and what doesn't, and we like to bring that to our clients, what works best, and then move it forward.
Okay, well, that's about all the time we have for the Q&A, but just kind of on a side note, do you two have any kind of final thoughts on what we're going to be looking forward to in 2020, how some of the things that we've talked about are going to change, and how those changes are going to affect fleets?
Yeah, I think my wrap-up for that will be the insurance prices, premiums is going to get harder for the next year, excess for sure, but I want you to be positive in knowing that the top 20 or 30% of the fleets, the ones who stand out, the ones who are hiring the best drivers and retaining them, the guys who are watching their CSA scores and trending them down, insurance companies are fighting for that business. So make yourself one of those people. Talk to the right people and make sure you are one of those fleets.
Absolutely. I think it's really about becoming that customer of choice and really working with that broker to show how good you are.
Okay, great. Well, that's about all the time we have for today. But for anyone who asked a question that wasn't answered, we will be following up via email to answer your questions individually. We hope that you've all enjoyed today's webinar. I want to again thank Jerry and Stephen and Hub International for today's presentation. I also want to mention that this webinar will be available on demand on the Heavy Duty Trucking website at truckinginfo.com/webinars. Thank you and have a great day.